Hello everyone. Today I will discuss on the important dates related to dividend. When a company declare a dividend, it will involve four important dates. So the one will be declared date, declaration date, the second will be the ex-dividend date, then it will be the record date, and the last will be the payment date. Now, what is the declaration date? This is a date on which company is going to declare that when and at what rate the company is going to distribute the dividend. Next and the most important date is the ex-dividend date. So now what is an ex-dividend date? This is the date on which the shareholders who hold the company share will be eligible for the dividend. Next is the record date. Record date will be 1 or generally 2 days after the ex-dividend date. And on this day, that means the record date, the company is going to check in their book of records that who all are holding the company share. Based on that, they will be doing the distribution of the dividend. And fourth is the payment date. This is actually the date on which the actual dividend distribution happens. So these are the four important dates, and as I mentioned that ex-dividend date is the most important date in this whole dividend scenario. So mostly that question comes that what will happen if there is a trade for that particular security before the ex-dividend date, on the ex-dividend date, and after the ex-dividend date. Why this trade thing is coming into picture? On the ex-dividend date, because I said that the ex-dividend date is the date on which if you are holding the shares, you will be eligible for the dividend. And record date is the date on which company is going to check their book of records that if you are eligible for the dividend. So how this dividend, ex-dividend date, trade on those date is going to impact if you are eligible for the dividend or not, I am going to explain that now. So here I have created one chart. If you see this, it will be easier for you to understand how and what the trade is going to impact your dividend. So if you see in the first table, it is called the trade before the X date. That means the X dividend date. Now I will be telling X dividend date as an X date. Okay. So if you have a trade before the X date, how it is going to impact? So let's say generally always for your settlement will be T plus 2 settlement date. What is that means? That if you are doing a trade today, let's say if you are doing a trade on 10th of June, you will be getting the shares actually on T plus 2 days. That will be 10 plus 2 days. That means on the 13th you will be getting those trades, getting those shares. So your record date will be generally 2 days after the X date. So if your X date is 10th of June, your record date will be 12th of June. Based on that, we are going to look at these scenarios. First scenario, if you have a trade before X day, so the example what I said, which is the 10th of June, if you have a buy before 10th of June, will you be eligible for the trade? Will you be eligible for the dividend? Yes, because you will be eligible for the dividend because on the T plus 2 settlement date, as you are purchasing before the X date, by the record date, you will be holding those shares. And as per company books of record also, you will be holding those shares. So, you will be eligible for the dividend. Next, if you are selling those shares before the X date. So, if you are selling it before the X date, that means on the X date, you are not holding those shares. So, you won't be eligible for the dividend. You do not hold the share on the record dates. Now, the most tricky part happen that if you have a trade on the X date. So, if you have a buy trade on the X date and if you have a sell date trade on the X date, how it is going to impact? If you have a buy trade on the X date, then after T plus 2 days, you will be getting those shares. So on the record date, you still don't have those shares. So you won't be eligible for the dividend. And if you have a sell, then even if you are selling it, your shares will not go out from you till the T+2 settlement date. So on the record date, you are still holding those shares. So with that concept, you will be still eligible for the dividend. So for my case, I can give you a small tips how I used to remember this. If you think of it, on the X date, even if you have a trade, I used to always remember that when you get up in the morning, you still have that share. If you are selling it, when you get up in the morning, you still have those shares. And if you're buying it, when you get up in the morning, you didn't have those shares. After that, you did the trading. So in that way, I used to remember whether I will be eligible for the dividend or I won't be eligible for the dividend. The third thing is if you have a trade after the X date. So this will be just opposite to what you are having before the X date. So if you have a trade before the X date, the buy will be eligible, sell won't be eligible. So in this case, if you have a trade after the X date, then for buy, you won't be eligible because you are buying those share after the X date. So you don't hold the share on the record date. And if you're having a sell after the X date, even if you're selling after the X date, on the record date, you are still holding those shares. So you will be eligible for the dividend. So this is the nutshell. I hope this example and this diagram is going to help you to remember how the trade is going to impact and whether you will be eligible for the dividend or not. Please go through this diagram, and if I tell you from an interview point of view, this question is one of the most important and favorite question for all the interviewer who ask about these dividends in the fund accounting. So I will come up with more of this kind of concepts and how you can prepare for the fund accounting interviews in my upcoming videos. So keep watching. Thank you very much.